What's going on, traders? Please make sure you like and subscribe to this channel if you like some of the information that you're going to be hearing. Also, if you stick to the end of this video, we're going to be giving you some secrets on how you can be profitable utilizing this information. All right, stay tuned. Yeah, so for those that are curious about it, curious about your entry, wondering why your entry is lagging, is because you don't understand candlestick patterns. Because literally when you understand candlestick formations and you actually understand support and resistance truly, then you should already have your entry. Like it should be little drawdown for you going in profit. Little drawdown. Little to no drawdown you should have going into profit once you understand candlestick patterns. All right, so we're going to go ahead and get started. So what I want y'all to do is I want y'all to go ahead and put in those top pairs that y'all want to go ahead and go over and get analyzed. So that way we can kind of talk about those. So we got EU, we got U Chief, EA, and then UJ. Awesome. Great pairs. It's not bad. So we're going to go over those pairs. And in the midst of that, we're going to talk about candlestick patterns or candlestick formations. Still, same thing. It's no different. All the same thing. All right. So the first one we're going to talk about is EU, since we're on EU, right? So when you're looking at the chart, like I said, I always talk about as far as being aware of, your time frames, what the time frames are for. So again, I've always broken down the time frames and I've explained to y'all the time frames like 4 hour in a day, the week, the month are like time frames. So that way you can kind of have a grasp of the overall trend. Well, that works for the overall trend. And it also works for the current trend. Like, what are you trying to play just today? You know what I mean? But you have to be aware of this. Like when I look at candlestick patterns, because that's the main focus that we're talking about, you want to see who has your money. Where's your money going? Is it going in a buy direction or is it going in a sell direction? Right? That's what you want to be aware of. And if we look at this overall movement right here, as the market starts to go up, what do we mainly see? And y'all can unmute yourselves if y'all want to. And tell me, what do y'all mainly see on this little direction that's going up right now? Do you see mainly blue or do you see mainly red?
Mainly buys, blue.
Exactly. You're seeing mainly blue. So that lets you know that temporarily right now, the market is controlled, or your money is in what?
Being controlled by buyers?
Exactly. It's being in control by buyers, because that's what we mainly see. So that's what I utilize those time frames for. Now, you might not be able to see that clearly on this time frame. You might be able to. You can kind of see that the blues are in control right here, but it's still a lot noisier. It's a lot noisier over here. So that's why we normally go to the 4 hour or the day. You can even go to the day. It's, even less noise. You can kind of see where you only have two red, two blue candlesticks. So you can see, okay, right now the market is still vastly in control by buyers right now. Even though it's a couple candlesticks, we see that the market is still vastly in a buy direction, right? That's what we mainly see. So where candlestick formations are important is, again, on your entry point. So Adrian, how do I utilize this information to really capitalize in the market? Well, this is how to utilize it. So everybody says that they understand support and resistance, right? Who does not understand support and resistance? If you understand support and resistance, go ahead and place that in the comments. Say yes. If you don't, say no. If you kind of understand it a little bit, you can put that in there too. But I just want to see what you know and what you don't. And it's okay if you don't. Awesome. Everybody understands that. So with the understanding of support and resistance, the disconnection is candlesticks. Because if you truly understand support and resistance, higher highs and higher lows, then there should be no problem why people are not going into positive faster. How many people that, and I want to see this, out of the people that said yes to they understand support and resistance, how many of y'all find yourselves in a bit of consolidation, or it's taking you a very long time for you to go and profit? So one person, hit and miss sometimes. And that could always be according to your time frame too. So again, that's no problem. So it can always be according to your time frame, because, you know, based off of what you're seeing, you know, you might be trying to enter on the 15-minute, but you might be in a level of consolidation. If you look at your higher time frame, you could see that, man, I'm in major drawdown right now because you know, yeah, it looks like it's finding a level of support or resistance, but on a higher time frame like the 4-hour, I got something like this, right? I got something like this, like almost like a doji. You go to the 15-minute, what does that look like? 15-minute, it looked like consolidation. You see that? Look like all consolidation right here. But overall, what is it doing? And y'all can unmute yourself. What is it doing right now? What have it found?
Creating a flag.
No, not a flag. Scratch a flag. I'm talking about support and resistance. It's creating, yeah, it's creating support and resistance. It's creating a higher low. So you see how the market, it went down, went up, went down, went up, and now we got this consolidation area. So I'm not worried about flags. I'm not worried about none of that. I'm just going off strictly off the basics right now. And that's what we're seeing. We're seeing that we have a level of support and resistance. Now, this is where the confusion comes from. This confusion comes from understanding, are the buyers and the sellers in control of this market? So right now, on a smaller time frame, it would look like and assume to us to be that the sellers are in control of this market. And that's why we don't look at the 15-minute or 30-minute when it comes to doing market analysis. We look at that for entry, for extra verification. All right. That's what we mainly focus on. So when it comes to understanding, are the buyers and sellers are in control, we want to look at the 1 hour. We want to look at the 4 hour. We want to see where the market are creating these patterns. These patterns. That will let you know that these markets are now in control by buyers and sellers. As this market was going up, we see mainly blue. We knew that the market was in control by sellers when we started seeing what? Majority red candlesticks. But most importantly, these candlesticks created patterns. So when they created a pattern, they showed you that the market was going down or going up. And then once it went down and going up, then we want to say, okay, this market is pulling back. We see that the sellers are in control of the market. Let's see where there's a support and resistance. We check it out. We say somewhere around here there was support and resistance. This was the area of the last high. Went up, broke it, came down, pulled back to it. And then when it pulls back, that's where our confusion is. You understand? We don't know the next step because we understand this. Does everybody understand this portion? We understand the higher highs. We understand that, but we don't understand what is next. How do we enter into this market? The disconnection is this. This right here. These patterns. These patterns. That's the disconnection. Every single time this market pulls back or retest the area, it always creates a candlestick formation. Once this area was broken, even if you missed this candlestick formation, you could have drew. The market went up. We see blue, we see red. That's a pullback. That is a pullback. We can draw a line there because that's support and resistance. This is a higher time frame. This is the 1 hour. We go down to the 15-minute, you'll see more. Everybody can see more now, right? And what do you see here? You see what? You see a high, created a low, retest, drop. You go to the 1 hour. What do you see? A candlestick formation. You see a continuation. So even if you miss this candlestick formation, which is what? What is this candlestick formation? Can anybody tell me?
Engulfing.
No, what is it called? It isn't engulfing, but what is it? What is that candlestick formation called?
An evening star.
There you go. It's called an evening star. It's called an evening star. And after this evening star, even if you miss this evening star, that's okay. That's fine. Because we understand that it broke support. The sellers are in control of this market. We see a strong sell candlestick. Hold on, okay, everybody say, okay, good. So after that, we could have played this. After this formation of this candlestick, we say, okay, we got an evening star. We enter in on the next one because not only do we got this evening star, we see that the sellers are in control. Our money is in control by sellers now. It has broken support. We can enter in. We immediately enter in. Guess what? We're in immediate profit. Immediately in profit. Can everybody say immediately? Immediately in profit, 22 pips. Little drawdown. There was no drawdown. Was there drawdown in that? No, there was no drawdown. It might have been like maybe 15 minutes, something like that. Maybe tops. There was no drawdown. So you see the power in understanding not only support and resistance, but understanding candlestick patterns. That's your homework. Look up candlestick patterns, candlestick reversal, reversal candlestick patterns, whatever you want to look at. You look up candlestick patterns. Study that. Wednesday we'll go over that. But this is what I want y'all to study because this will define your entry. So now we're over here, right? We see that the market has created a new low because it's broken this support and resistance area. It's created a new high. Now what we need to see is what? Can anybody unmute yourselves and tell me what we need to see for it to be continuing down to the downside, for us to enter and for this sell? What do we need to see?
Lower lows?
What have we been talking about pretty much this whole time?
Candlestick formation.
Candlestick formation.
So you want to see like a bearish engulfing candle break through that support?
Yes,
Okay.
exactly. I need to see a variation of a candlestick pattern. I need to see some type of variation of a candlestick pattern. Most likely, this would probably end up being like another evening star. Because what? I have the buyers in control of the market, which I have this big one. It's still finding support, right? We have this doji. And then lastly, we need to see that this one actually breaks this area. And then that would be an evening star. Once we have the evening star, then we can go ahead and say, okay, it has broke another level of support. We can enter into this market and write it down again. That's simply your entry. That's your entry. That is your entry. That is how you enter the market. Vice versa, that's why we wait for the candlesticks. Vice versa, if it were to say, forget it, it closes like this, and the next candlestick becomes a blue one, formulates and cross this area, right? So it would look like something like this. It does that. Are we entering the market at that point?
No.
No, we're not. And why are we not entering into the market?
Because it looks like it may continue going up.
Exactly. So at that point, we're what? We're reevaluating the trade. We're reevaluating the way we enter into the markets. Because what can happen is we can have the market continue on up. Do something like this. Hold on right quick. Exactly. At the point, retest the high. And then after that, come back down. And possibly retest this low. Right? And then at that point, we want to see something else. We want to either see that it's broken again to possibly go down go down that direction, or respect this area and then throw another pattern. Oops. Another pattern. That's what we want to see. We want to see another pattern thrown. So that way we know that, hey, now this thing is going up. Because once we see that, that's how we do it. And that's why, like Christopher Derrick, he talks about those things far as like, oh, he's waiting for it to simply retest the high, retest the low, and then that's it. But when you have it broken down like that, it still doesn't make sense to you. Like, what exactly are you paying attention to? You know what I mean? So that's why I said, like, it's still up to us to find out exactly what it is that, that I'm looking at, that Christopher is looking at, that, Lindor is looking at, that, these other teachers are looking at. It's up to us to figure it out. And what they're looking at is candlestick patterns.
Adrian, I'm
Oh,
sorry,
yeah.
I have a quick question.
Yeah.
So if what we were saying before you gave us the scenario of it, I guess playing that pair to the upside, when we were
Mhm.
gonna play it to the downside in the event that we have that that bearish candle,
Mhm.
wouldn't we wait for a retest before we play on that, or we're just gonna play on the fact that it's giving us an engulfing bearish candle?
So that's a good question. You can do that, or you can simply go to a lower time frame.
Okay.
So if you go to a lower time frame, then you can see more exhaustion, or you can see continuation. So for instance, like, let me get rid of these right here, and then we can go to the lower time frame and observe this area, because there was no variation of pullback here. It was just going down. But if you went to a smaller time frame, you'll see a small pullback. So if you need extra confirmation, go to a smaller time frame. So that area right there. We go to the 15-minute. What do we have? Pullback. That was the same little area that I just marked up. Versus on the 1 hour, you didn't see that. So that's why I said, that's why we go to those lower time frames. So after this candlestick is formed, there will be a little drawdown. That little drawdown could be that small pullback that you were waiting for. But that's why we utilize the 30-minute and the 15-minute for extra confirmation. Because it wasn't confirmed right here. Nothing was confirmed. It just went down. Versus right here, if we would have drew a line here, just a simple line, ladies and gentlemen, a simple line, go to the smaller time frame, we would have been able to see, oh snap, it did pull back, exhaustion. And guess what? Now we still have another engulfing candlestick. This is another evening star showing us that this, look, let me go ahead and right here. Another one, letting us know that this market is still in control by sellers. It breaks, it continues down. So, that's why we utilize those smaller time frames. The higher time frame, that's why I always utilize like the 1 hour and the 4 hour, because I like to find those candlestick patterns. And then if I need clarification, then I can go to the lower time frames. And like I said, my entries are, pretty much on point because of that, because I'm just utilizing the candlestick pattern. I'm waiting for a candlestick pattern. And then once I get the candlestick pattern, then I'm entering, or I'm utilizing the smaller time frame, so that way I can get extra confirmation. And then once I have that extra confirmation, it's over. Like, let's go ahead and kill the market. So on this one, you want to wait for either that engulfing, or you want to wait for, you have to wait for something. So with this one, if you want to play it to the downside, you got to wait for the engulfing, play it to the down, or you want to wait until that next candlestick and see which direction it plays off of. Then we have, what was the other one? U-Chief. U-Chief was also another weight scenario. Like, the only one that I actually had to play out to the downtrend, or like that was like really clear, was this guy right here. That was NU. NU, I can see that continuation. I could possibly see like maybe a pullback rise to respect this area, pulling back somewhere around here, and then continuation. Like this was the clearest continuation pattern. Like this whole way down, it's just been creating higher highs, higher lows. Y'all see how basic my chart is? I know a few of y'all asked me about like far as cloud training and stuff like that, but cloud is, if you were to utilize a cloud, it would just be for the trend. Of course, you can utilize it for entry. You can utilize it for anything. But look how basic this is. Is this not basic? Yes or no? You can put it in the comments. Is this basic? Can that be? Is that clear? Is this clear? You can clearly see higher highs, higher lows. You can see the trend. I didn't use a cloud for that. I just used support and resistance lines. I marked out and saw where my highs and my highest point. I used trend lines. And every time when a low was created and a high was created, I utilized these lines. And then I use candlestick patterns to enter into my trade. Now, of course, I do use EMAs and I do use the index. And y'all know this. But at the same time, like there's no need. Like when you find a trending market. So that's why I said, like, I focus on trending markets. Like when EU is trending, like it trends, like it looks great. Like I show you back here, like this whole way down, like it was a trending market. It was clear. You can see the downside. Like you can draw your highs and your lows as it was going up. Even with this one, it kind of, it's kind of pulling back right now. But if it throws that sign of continue to the upside, like it would still be clear. Like this is still a level of support. If it doesn't break this, then I know which way it's going. Like this is still clear, right? So you want to find clear trends. And if you can't find that, then move on to the next, move on to the next. So going back to you, Chief, because those two actually you move opposite of each other. You, Chief, and EU normally move opposite of each other. What I was saying with this one is the same scenario. So we go to the 4 hour because I can clearly see better on the 4 hour. But if this area right here is respected and we see an engulfing red candlestick, then guess what? We're going to move to the smaller time frames. We're going to move to the smaller time frames, and we're going to see where's a clear entry point, or we can simply enter off the 4 hour. But we just need to be aware of our candlestick patterns, because we see that this market is creating what? Higher lows, higher lows and lower lows, higher lows, lower lows, higher lows, lower lows. But we also understand this is overall an uptrend. So this could be simply a pullback. So that's why we're waiting for continuation. Continuation would have been this engulfing. It came under, it pulled back, there was, the resistance, engulfing red. I'm entering in the market. There we got that. It pulls back. Throws some resistance. We got more red going down. That's still not really a good candlestick. So we might have had to go to the smaller time frame. That's fine. But we would have had it right here when we saw the up, and then the red, which is a railroad. This is a railroad formation. We would have caught that. So like the market will always throw those. So right now the market is undecided. Like we don't know. The market could literally do a blue candlestick right here. And if it throws that, then we know what? The buyers are in control of the market. So then you can either take the buy on the 4 hour, or you can go to a smaller time frame to verify that the market is going to continue up to retest this area. Everybody, does that make sense to everybody?
Yes.
Okay.
I do have a quick question though. On the hour, for you, Chief, is it looking like to you? Because I'm still trying to work on verifying like certain patterns and stuff like that. On the hour, does it look like it might be forming a head and shoulders?
It could possibly, but I wouldn't even worry about the head and shoulders as much. Like, so what I would worry about is actually seeing like, okay, if it does it engulfing, I can play this to the downside, and I know the furthest that I could play, that I would play, is right around here, unless it you know, threw something else. Now, if it stopped there and it did something similar to this over here, then I know that, yeah, that could possibly be a head and shoulders, because it could possibly retest this low and then not break that low, do the same thing over here, and then go to the upside. So it could do something like this. Oops, is that a line? Oh, my bad. But you get the picture. That's what it could do. And if it did that, then, you know, of course it would be going, you know, moving back up to the upside. And that would be a head and shoulders, yes. But normally head and shoulders is a very, very big reversal pattern. And normally if it's gonna formulate that, then you would see a complete engulfing candlestick, like a strong push to that upside, breaking this area, and then you know that it's going up. All in all, this thing is still creating lower lows and then lower highs. Higher lows. So just got to be aware of that. So right now, what I want to see is, I want to see some type of retest break. I would, depending on how strong or powerful the next candlestick is going to be after the break or the rise, then I could play it to the downside.
It's pretty much been consolidating, like for the past couple of hours. So I'm not sure if it's getting ready to make like a big move.
Well, was there news that's supposed to be coming out tomorrow?
There's GBP news like at 4:30, and then USD news at 8:30.
8:30. So it's possible it could be even waiting for that. Like we could see consolidation all the way out until that to either make its move to the upside or the downside. But if it's finding this level of resistance, then it could possibly do like a push to the downside. Like that could be the push that we was, you know, thinking of, that, you know, go to the downside. So yeah, we'll see. You just got to keep your eye out on it. And if it does that, then you know exactly where it's going. And then also that would verify as far as with EU, is that going to be continuing up? Because if that continues up, then you know this is going down. And that's what I found for, you know, studying those two pairs. EU and U Chief are two pairs that I studied pretty much from the start of my trading career. And I've always seen them go opposite of each other. It's been rare occasions where I've seen them, you know, doing the same thing. A lot of times if they're doing the same thing, they're just consolidating. They're both just consolidating. That's why. All right, and then the next one. Let me see the next one. The next pair that we was looking at. NZDs. See, look, and I thought that too, but the thing about it, you just gotta know it. That's all it is. You have to understand the patterns, structure, support, and resistance. Because like I told y'all, like I got stopped out on it, but I also won on it too. And the reason why I got stopped out on it because I second guessed it. If I would have just played what I marked up, I would have been good. Like there would have been no, you know, I wouldn't have had no losses on it. But it's just simply finding that trend. So once you understand that trend, then you know you're pretty much good on it. But it can be. you know, any of these pairs really, you know, even mine, you know what I mean, it can throw sideways on me, be sideways on me. So EA. So EA is one of those pairs right now too. That's kind of like in that consolidation mode. It's almost creating almost like a flag. So all you got to do is just be aware of your patterns. You know what I mean? Like you see this is like, oh yeah, this is a flag formation. But how did I get the flag formation? Flag formation is what? Break of structure, pull back, retest, and then another break of structure. Does that make sense? Does everybody kind of catch that? Did that follow that? It's literally a low, break, and then after that, it comes back down and then it breaks again. So simply just based off of this, if we see a break to the upside, then we already know how to play this. We're going up. But if we see a break to this low, then we know that, okay, most likely there's going to be some type of support probably on a 15-minute, and then we play it to the downside. Most likely, I could see this possibly doing a rise because of this. Because it's not breaking a low point. Like we can go down to the 30, probably 30-minute would even see to show that. You have to go all the way down to the 15. But you can see how the market is kind of creating this low point all over here. All this right here. It's pretty much like a low point. Low, low, low. And this area is not really being broken right here. This area right here is not really being broken. Even with this small area right here, it kind of seemed like it broke it, but guess what? This blue candlestick negated that because it literally went under and then the next candlestick closed equal to that. So that was a low that's being respected. So if we see that market breaking out of this area, finding some level of support, then guess what? It's off to the races and we're buying at that point. Same thing right here. Check this out. The market was respecting this. It was going down until it broke it. And guess what it did? It found a level of support off of that trend line. We go down to the 15 minutes so you can clearly see it some more. Like, ladies and gentlemen, like the market does this. Breaks it, support, buys in the market. Boom. If you didn't catch this move, that's fine. You don't have to catch that move because guess what? You got another opportunity right here. And found support. If you didn't draw it right there, you could have drawn it right around here. And you would have found that level of support. You would have seen that the market did that. And you said, okay, yeah, that's a level of support. I'm buying in that. It's just literally just taking the time to look at those smaller time frames and see what's going on. And see, this market right now is just wedging. It's just wedging. So in order for me to buy or sell in this market, I need to see a break of this area. The market needs to clearly break this area. And then of course, like on a 15-minute smaller time frame, you'll see a level of some type of, resistance or some type of support. And at that point, you can go ahead and buy or sell accordingly. And I hope what y'all do, I hope when y'all following me, that y'all have y'all charts up and that y'all are marking this stuff out too. Because as you mark this stuff out, then y'all can kind of see, oh snap, the market did follow that. Oh snap, the market did, did exactly what he thought it was going to do. And then as it follows it, then you can follow it and you can, enter your trades accordingly. Awesome. All right, so the next one. And the last one is going to be UJ. So with UJ, this one was kind of crazy. It kind of made, I was able to profit a little bit off of this. The only reason why I was able to is because I seen like this little movement here. We see how it made this low over here, rose up, made another low, a lower low right around here. Right, this kind of formulated almost like a head and shoulders in a sense. It went up, it pulled down, it found some type of level of support here. And when it did not break that low, it kind of told me that the market was going to go back up. And lo and behold, what happened? The market was creating lower lows, right? Higher lows, lower lows, higher lows, lower lows, higher lows, lower lows, higher lows, lower lows, higher lows, lower low, created a new low, went up, broke the trend. This is, I mean, textbook, literally textbook, y'all. Break the trend, found a level of support, and then up. Simply by understanding higher highs and higher lows that everybody said that they understand. There is no excuse that y'all cannot win in this market. Because when y'all apply just basic, and I did this without anything, the only thing I had on here was trends. I didn't have no cloud. I didn't have anything. And a lot of y'all want to learn the cloud. And even Miss Kathy said this. Everybody wants to learn the cloud, but nobody wants to learn this. This is the base. Like you want to learn the cloud and you can't even figure this out. We have to figure this out first. So that way we can understand more advanced strategies. And the cloud is really not that advanced. All it is it's a trend. It's a trend chaser. It shows you the trend. So in a sense, it's a lagging indicator. Any trend indicator is a lagging trend indicator. It lags behind the actual price action. So even though it may give you a glimpse of what it could do in the future, right? It gives you a glimpse of what it could do in the future. It's still a lagging indicator. It still lags behind price action itself, right? So even if it does show you what it could do in the future, you got to understand that price action itself might show you that, hey, yeah, this is going to happen in the future, but guess what? You still got to go through all this first. That's why Miss Kathy always talks about proper risk management. You know what I mean? Proper risk management, because it could be a couple days, it could be a whole week before a trade actually goes into profit. And y'all probably experienced that. But because of, some people over leveraging, man, I blew my whole account. Oh, because you over leveraged. Your account couldn't take it. Versus if you would have traded, proper risk management, you understand it. You would have been like, I'm okay in the red. I can go 100 pips and not blow my account for it to go back, 50 pips or 100 pips in a profit because I'm utilizing proper risk management. Yeah, UJ does follow the dollar index because the primary is what? The primary pair is USD. Exactly. So even with this, like we see how the market came up, the market could possibly pull back here, find some type of support, and then go up some more. Or it can break this area, find resistance, and then go down some. But this one's a little bit, this is more unclear right now. So yeah, if this is your pair, pay attention to it. Always check on your pairs, right? So that's what I do. I always check on my pairs. Always check on my pairs. But I'm always aware of, where I'm at. And I try to look for pairs that are already trending. Yeah, exactly. And Cam nipped it on the bud. Like she was saying that you got to understand, most people's accounts can withstand. They can withstand 50 pips in the red, 100 pips in the red. But the thing about it is, it's because all about that proper. It's all about that risk management. You know what I mean? If you're risking properly, if Miss Kathy or anybody calls a trade and she says this is going to go in a profit, like for for the most part, Miss Kathy's really good with her trades. But you got to understand, a lot of times when she says that, hey, I haven't had a losing trade since whenever, she means that because she's utilizing proper risk management. She has the account size to withstand being in the red for a long period of time. And then as it goes into profit, it might take a whole week, it might take 2 weeks, but she's able to hold that. And the reason why a lot of people are not being able to is because they do not utilize proper risk management. If you have $100, for every $100 is a 0.01 that you should be playing. That's proper risk management. So that means that if you go 50 pips in the red, you're still good. You still got your account. For every $100 that you got in your account, that's a 0.01. So if you got $200 in your account, that's 0.02, and so on and so forth. The only way that you should be paying a standard is if you got $10,000 in your account. Or, and that's proper risk management. Of course, we got, young thugs on here that can, I ain't gonna call no names, but at the same time, that be doing, doing the most. Hey, I'm gonna leave you alone though, Cam. Look, I'm gonna leave you alone though.
Keep it all the way cute, because I knew who you was coming for. Keep it cute.
Look,
keep it cute.
Hey, but at the same time, even she understands, like, everybody can't do that. You know what I mean? And you have to be aware of what you can and cannot do. And with certain people, they understand that they do not have like that's why I said it's all about that mental aspect. If you don't have mental attachment to your money, when you put it in a market, you can make endless, possibilities. Disclaimer, all right? She's made over what you said, 20,000 plus in the last couple months because
I'm at 36 now.
Okay, well that's what I'm saying. So because of that, you have no mental connection to your money because you have your process. You know what you're risking, you know what you're doing. You're utilizing your own proper risk management because you understand your process. But most people new coming in don't understand that. So that's why I teach that. That's why she teaches that. That's why every teacher that you come across always talks about risk management. Because once you understand your own proper risk management, then when you can leverage what you want and you have no connection or no ties to your money. So when you make what you make, it's like, you're not surprised by it. You're just like, okay, well, it's just another day. And if you lose it, it's like, okay, I'm not worried about it. Because you want to get it back. So we want to keep on, like I said, that is the main key. So, IML, Adeze talks about risk management. Out of all the lessons that I've ever taught in the world, out of all the lessons that Cam taught or any other instructor that you have listened to, the most important, powerfulest thing that you can get out of everything is proper risk management. Period. That would literally make or break you. I always talk about how this thing is 10% technical and 80% mental. And it's because we do not take advantage of mastering proper risk management first. All this stuff you can learn all this stuff really in like a month. Like with Cam, how many days can you really give somebody learning your strategy? How many days do you think you give somebody really learning your strategy?
The new strategy or what overall?
Yeah, just overall, just in general, just like the base of it, just to understand the base of it.
Well, maybe a day after I evaluate you and interview you.
Right.
Because not everybody is going to, like me, for example, I took this. I came in with a bulk of friends in January. But to me, it seems like I'm the only one that took this at a high rate because I wanted to get out of a situation. So I was willing to do the due diligence to learn as much as I could to put myself in a better position. Now it's like people are asking me like, well, how did I do it? I did the same thing you did, except I just went at a high rate of doing it. I didn't do nothing different. You had everything. You had every access that I had. I just studied more than you, to be honest.
Exactly. But even far as the basis of it, you would say you would probably knock it out probably like maybe far as just learning like the websites where to go to, you know, how to get up in the morning, stuff like that. You can knock that out. Now, of course, the method is more than that, but you can knock out just the basic understanding of that in like a week, probably. You know, even what I teach, you can probably knock that out within 2 weeks. Like, to be real with you, I'm just being completely and utterly honest with you. Like, all the stuff that I teach, you can probably knock that out within 2 weeks. Seriously.
Actually, I did. It was 2 weeks. When I was under, this is how I started, how I found out on him. One of my friends had access to you. So I was like, oh, his academy is legit. But we had went through, I was like, well, since I don't have no password to this, let me get my own stuff. So I paid you for it. I mean, because I didn't know nothing. I mean, he had it, and I was like, well, I don't know how to get in touch with him. So, and then that's when I started asking questions. See, that's the thing. I asked questions to get me the answers that I needed. I need my questions answered. And that's how I won in the end.
Exactly. And that's what I was trying to tell everybody. Like, it's all about taking your time and actually understanding that the psychologic behind that is all about, you know, at the end of the day, it's you. You are your worst enemy, and you could be the person that, you know, is your greatest MVP. You can be your MVP or you can be your worst player. But at the end of the day, it's all you. You know what I mean? It's not hard. It's not hard to learn any of these strategies, but we make it hard. We can make it hard. Okay. So that's gonna wrap it up for me. Does anybody else have any questions or comments before we get off? The colors for my EMAs or my SMA, excuse me, my SMA on the 8 is red, and that's for, my red for my 18, and like blue for my 8. And again, I don't use those for crossing or anything like that. Also, when those cross, you enter? No, I don't enter off of that. I enter, those are strictly, every EMA that I have on mine is literally just to track trend. That's it. Track and trend. Or counter trend moves, one or the other. But other than that, that's it. Again, I go off of candlestick patterns. Everything that we talked about tonight, that's what I go off of. I do not wait for any crosses. I don't wait for anything. I go off of price action, because if you're waiting for a cross, there's lag time. There's lag time with that. Now you can wait for a cross. Now if you say, for instance, you get the candlestick formation, you have the engulfing, and a 5 and a 13 does cross, because those are the ones that I work with for like crossing on my MT4. When I'm looking at my MetaTrader, when I'm looking at my Trader's View, I'm just utilizing Trader's View for marking up the charts. Entering the market, I use MT4, and on that has the 5 and the 13 and all that. And you can use that, but don't rely on it. Do not rely on it. Everything that we talked about tonight is price action. No indicators. No indicators. Understanding that when these candlesticks, at the end of the day, like I said, who has your money? Who has your money? Where is it going? Is it going in a buy market? Is it going in a sell market? Learn the candlesticks. Because when you learn the candlesticks and then you see that 5 and a 13 crossing, then that's just extra confirmation. But first you need to be paying attention to these candlesticks. Always. Because what can happen if you're waiting for a crossing, it can be lag time. And now you just missed out on potential pips that you could already had. Every single indicator gives you, it's lagging. They're always lagging behind by a pip or pipette or something. They're always lagging behind because they're tracking the market as it's happening. And again, they're extra help. They give you extra help. But at the same time, they're not there so that way we can solely rely on them. Oh my goodness, Dion. Lord Jesus. I know you've been too far away. If you've been in this thing way too long for you not to know the colors for now. I'm not giving you the colors for that. I'm not. I'm sorry, I'm not, bro. I'm not gonna give you the colors for that. You've been in this thing
So
way
he's
too.
gonna give me the colors, so
I'm
write them
not
down.
You can give him the colors. I'm not gonna give him the colors. And you need to get on a one-on-one with me, sir. You have to get on a one-on-one with me. he said you better be glad I'm in St. Louis. Oh man, you crazy.
Give him 3 minutes. He'll give you the color.
All right, look, okay. Look, the 50 is sky blue, the 200 is white, and then the 800 is royal blue.
All barking, no bite. See, he was gonna give it to you.
Whatever, sis. Anyway, if anybody else don't have anything, we're gonna go ahead and wrap it up. All right, I think we got a lot of news coming out this morning, right? Got a lot of stuff coming out this morning. So y'all got a lot to look forward to. You know, pay attention to those trending patterns. And yeah, that's it. If y'all don't have any other questions, we'll go ahead and wrap it up. Y'all have a good one. All right. Take it easy.